All right, let's get you updated on what the trade is doing on the ag commodities here on a Monday morning. I'm Marlin Bohling with you. Let's dive into the grain side first with our quotes provided by Bar Chart. On the corn market so far this morning, it kind of eased back a little bit right on the open from its overnight gains, and now it's starting to push. So we have March corn now 6.5 cents higher. Check that out. It's $6.50.5. Well, now it almost matched its overnight high, if not taking it out. Now we're within just a tick or two of its high of the overnight and early morning session here. Soybeans, they are definitely going the other direction, though. A lot of pressure in soybeans here, and that continues. January down 22.25. We're at 1461.75 now, and March is down 21.75 at 1466.5. In the Chicago wheat market here today, we're starting out with March 10.25 higher. We're at 1044.5. New crop July, it's 11 higher at 760.25. Now on the Kansas City market here today, you have March 9 higher at 842, and the July new crop is 9.5 higher at 831.5 per bushel. Minneapolis wheat was kind of dragging its feet overnight. Now it's kind of catching up here. March wheat there, 8.75 higher at 910.25. And we have July 7.25 higher at 906.25. Kind of interesting how that trade is shaping up. Meanwhile, in the cotton market, March is down 124 points this morning at 79.71. We have Chris Swift in the studio with us, and he is with Swift Trading. He's based right here in the Nashville area. Good to have you with us.
Good morning.
Happy Monday to you.
Yes, sir.
Mixed action in the grains this morning.
It is.
So that's kind of normal, isn't it, for this time of year?
I think so. Holiday trading. And, the bean market probably last week had a great story with the reverse and the crush where the meal and the oil has some big moves in them. And so the beans are just kind of reacting to that. And then probably a little bit of lack of farmer selling from last week. I would have thought that the farmer would have gotten busy and marketed some more inventory before the end of the year. And we see the spreads out there are not having too much carry to them, so there's not a great deal of incentive to store right now. But I think it's just a mixed bag. Everybody's waiting for the new year.
I wondered if that would be the case, if the farmers would be sitting tight now that winter is kind of settling in, as Tim Ross is pointing out, in the northern part of the country. It's not going to be that comfortable to get grain out of the bins right now if you have to do that. And the market is not giving all that much incentive to go out and actually haul to town right now.
It's really not doing much of anything.
Yeah. Now, last week there was a lot of talk about Argentina and the fact that, the drought that's ongoing there may cut their production a little bit. And that really drove the soy meal trade, right? Because they're big meal producers.
Right.
So what changed in that regard?
I'm not real sure that anything has yet because we just have backed off. Today's the first day down from it. So Friday set the contract highs in it. So I'm not real sure just yet. It's going to probably take several weeks of this. It won't be, I think, straight up and straight back down again. But probably the issue is over with in it.
So when you came in a little bit ago, you and I were both watching Tim Ross give the weather. And I actually walked up to one of the monitors here in the studio, and Tim was animating the projected moisture path in the plains and everything coming out of that winter storm. But it was so obvious that it's missing the southern high plains.
Right.
Is that what's lifting the wheat today?
I think probably so, some of it. What it's really going to do is impact the cattle market with the inability to get those pastures out in that area and get that wheat pasture up and growing. That's what's probably going to be the most damaged out there.
Okay, so with that in mind, hold that thought. And I want to talk with you about that livestock side when we get to the other side, because there's several things that may be pushing and tugging on that market. We're talking with Chris Swift. We'll have more right after this. Okay, we were just talking about the potential winter storm impact on the northern plains, but it may miss the central and southern high plains area. And let's see, we'll talk about that in just a minute. I want to see how the trade is now focused here on the live cattle and feeder cattle futures market. So far, live cattle, on our quotes provided by Bar Chart, they're showing just a little bit of strength, and I mean just a little tiny bit. February up a nickel at 155.60. April live cattle only one tick higher at 159.37. But June and August are down about 15 to 25 cents. On the feeder cattle market here this morning, they are actually weaker. January down 35 cents. You have March down 37. We're at 184.72 after an early high this morning of 185.17. Lean hogs, they seem to surge at the open this morning and then quickly sold off. And February, after printing a very early high of 84.17, is now at 83.30, and that's down 70 cents on the day. It's off of its earlier high this morning by about 90 cents or so. April down 82 right now. Let's go back and talk about this cattle situation here. Okay, with the winter storm moving through and largely missing what I would consider the feedlot areas of the Southern Plains area, they should be safe. But do you think that it could have an impact on the market when you go up into the cow-calf areas, like in the western Dakotas and the Nebraska Panhandle area? Because they're going to get hammered on a winter storm.
And it's always possible. It depends on what their birthing time frame is. If they've already had the births, then yes, it will. If the cows have not birthed yet, then it probably won't make that much difference to them. But any time now where we get the warm weather and then turn off really bitter cold and then go back warm again, this is kind of the season where we do that. And we would look for an increased illnesses from that.
Technically, it's not even winter yet.
No, it's really not. And they've already had some snow up there. So the one nice thing about it is the cattle may be already acclimated to some extent to that.
Yeah, I just always have to worry about the young calves out there.
True.
And they can be susceptible to pneumonia and stuff
Absolutely,
like that when you
they
get a bad winter storm. And it seems like maybe it's getting just a little bit of an early start this year.
It is. And we're already short enough in supply now where anything that happens now is going to be exaggerated that much more in the markets, especially the feeders, where we probably need those heifers and cows to be held back on the farm. And unfortunately, most of those heifers are still going on feed right now.
So heading toward the holiday packing plant runs, you think the cash market is going to be weaker this week?
It probably will be, and simply because all of the buying is already taking place and the production lines are already in for all the holidays. So you might have a little bit of a heavier kill today or tomorrow, but after that, it would be very difficult to get any product on the store shelf between now and the end of the year.
Yeah, good point. Well, I'm glad you made it in. Thank you for talking with us for a little bit.
Always a pleasure.
It. Chris Swift of Swift Trading out of Nashville with us here this morning in studio. Janet, back to you.